Quick note, the Black Friday sale for the Meet Kevin programs is live at meetkevin.com. In this video, we are going to preview Nvidia earnings. This is a big deal if you are exposed at all to the chip sector, artificial intelligence investments, or you're curious about what to look for this upcoming earnings report. Keep in mind, after the insanity of what ensued over this weekend, which left a lot of people really sad, with the exception of Microsoft CEO who's really happy, OpenAI's move to Microsoft, well, at least a substantial portion of the OpenAI employees who are threatening to leave, in addition to those who have already left, will probably mean more investments from Microsoft into artificial intelligence related spending. Now keep in mind, Microsoft does have its own artificial intelligence chips, but these are built on a 5 nanometer technology. They're not as powerful as the Nvidia H100s or the combination new Grace Hopper 200. These are great products. And the reality is most businesses right now are trying to get their hands on any kind of chips that they can get their hands on. Here's the example of what Microsoft is building out. It is the Maia, M-A-I-A, anyway, 100 AI accelerator. There's also a CPU version that sits at the top of this rack that they're manufacturing, or designing as well. Microsoft is using Taiwan Semi to manufacture. But why I bring up OpenAI at the beginning of this Nvidia discussion is I actually believe that in order to now panic transition, I really want you to think about that. Your panic transitioning is what you're doing from an OpenAI relationship, which you're going to maintain that relationship at OpenAI from Microsoft, but you're going to go from maintaining the GPT 3.5 4.0 relationship to creating your own version, potentially even stronger than what you have with 3.5 4.0. Now, why again am I bringing this up in an Nvidia segment? Well, because even though Microsoft is dabbling in making their own chips on a basically dated chip wafer platform, or the semiconductor spacing platform of the 5 nanometer chips, which is probably, quite frankly, good enough for the data infrastructure anyway, but it's still a dated chip. You know, we're getting down to 2 nanometers now. A lot of advanced chips are being manufactured on 3 nanometers. Point is, though, Microsoft is going to, in my opinion, be in a situation where they say, uh-oh, in order for us to catch up, basically go from 0 to OpenAI level, we're going to have to throw hundreds of millions of dollars, if not billions of dollars, into AI now. And we don't have time to wait to get enough of our own chips. Let's buy what we can get our hands on now. And that is going to be a combination of Intel chips, AMD chips, Nvidia chips. They're going to grab whatever they can, in my opinion. This is going to be very much like a Tesla buys H100s, Tesla buying 10,000 H100s, thanks to Elon Musk's desire to accelerate FSD as quickly as possible. Why not just make more Dojo supercomputers? Because you don't have the time, you don't have the quality yet, you don't have the perfection yet, and you don't want to sandbag your ability to compete while you try to perfect the chip when you could just spend the money, buy one off the shelf, so to speak, as supply becomes available, and get to your real mission, which for Tesla is accelerating FSD, which for Microsoft is now creating that OpenAI competitor. Let's be clear, I made a video on this earlier. Microsoft has now essentially de facto control of what's left of OpenAI and the brain of OpenAI that created OpenAI in the first place. So they kind of have everything, which topic for a different video on whether or not we should be fearful about that and artificial general intelligence and otherwise. I already made a video on that. You could just type it into YouTube, Meet Kevin, OpenAI, Microsoft, and you'll see it. It's very detailed. So watch that video. But let's now focus on Nvidia. Nvidia's earnings are tomorrow. Expected implied one-day volatility is 7.11%. It's about 2% more than the average of volatility. I think if you get anything outside of guidance here, you're probably going to see more like a 10% drop or 10% boon. That's my guess. Now, it could be in either direction, so we have no idea. But if I'm looking at this thinking, okay, if implied volatility is only 7% on an AI play right now, I'm probably looking at straddles, not personalized financial advice. But I want you to know where they sit with Wall Street expectations and where we have some new expectations coming in for Nvidia. So we're going to go through all of these. We're also going to go through some price targets. Now, the first thing that I'd like to do is look at their last press release, because in their last press release, you're actually going to see what their prior estimates were. And their prior estimates for this quarter are going to align with what Wall Street is pricing in right now. And you'll kind of get to see how excited people are, okay? Here are the estimates. Wall Street right now is pricing in $16.1 billion of revenue. They gave guidance of $16 billion, so you're leaning towards the upside on that. And on margin, Wall Street is also pricing in the upside of 72.46 on margin versus the guide that they gave. So you're already leaning into the upside on estimates. I think the biggest risks outside, of course, missing these estimates for Nvidia are going to be what they tell us about supply. In order for Nvidia to keep printing, we need more and more supply. And in the last earnings call, Nvidia told us that they expect more supply to come on essentially every quarter over the next year. But if there are any snags in supply, you could have a hit to this stock price pretty quickly. It's priced well right now, and it's priced optimistically based on what we're seeing. That doesn't mean they can't beat an optimistic forecast. It's just harder to beat something that's optimistic. It's easy to beat something that's bearish, harder to beat something that's optimistic. I'm not personally so worried about the China debacle and sanctions. We're still waiting on more guidance on exactly what's going to happen with that chip disaster for selling chips to China, which currently make up 20 to 25% of Nvidia's revenue. Nvidia has already told us they don't actually expect any kind of sanctions impact to be material, given that their revenue is just absolutely exploding. I mean, over $10 billion in a quarter from data center. It's absolutely insane. And the pie is growing, even though there's more competition coming from AMD, Intel, Microsoft, Google, all these companies making their own chips. The pie is growing substantially. We'll go through some estimates here in a moment, but I want to be clear. Personally, gaming, lapping a hole. That's good news. China, not so worried about. Supply, that would be the big red flag if we have a supply lag, because that's just going to give the competitors more time to catch up. Keep in mind that Nvidia is also shifting from an 18 to 24-month refresh cycle down to a 12-month refresh cycle, which gives them a little bit of moat against their competitors. It's kind of like having a new iPhone every year, and you're trying to like stay ahead of the competition, whereas the competition is basically trying to now shoot ahead of you, and that's a little harder to do. But look at what Goldman Sachs has to say. Goldman Sachs right now has a $605 price target on Nvidia. They maintain this as about approximately a 24% upside on the stock. They think you're going to see a lot of wallet shift. This is just a fancy way of saying, look, Google spends $20 billion on plant, property, and equipment spend in a quarter. Okay, in a quarter, that's almost $1 billion a day going to plant, property, and equipment. How crazy is that? Just writing those checks every day. I don't envy their accounting department. Anyway, this is massive money. And Goldman's suggesting that you're going to see a lot of those investments move away from regular data center, general purpose compute, storage, cloud compute, right? And it's going to move over to artificial intelligence. Google already reporting that 80% of their users who run ads are already using some form of artificial intelligence. The problem with this is it's not just a matter of buying the chips. It's also a matter of running these machines efficiently. So for example, if you have server racks like this, and then at the top you have, let's say, an AMD CPU, or maybe you use the GH200 CPU, and then on top or underneath that you have a bunch of the H100 GPUs or the A100s or whatever. You need to connect these server racks and connect within the server racks with the highest quality potential data infrastructure, which is basically a fancy way of saying you need the good crap, the good Ethernet cables, okay? And guess who makes the really good server Ethernet cables? It's a product called Infiniband. Infiniband is basically your data center Ethernet grade, Ethernet or data center quality, high speed, artificial intelligence, robust, cabling. Infiniband is it's again very, very similar to Ethernet. I want you to see what it looks like because I think it's kind of cool. This is what it looks like. It kind of looks like an Ethernet that's rigged with a different plug, quite frankly. This is just a quick little Google search here of what Infiniband looks like. And I mean, look at this, 200 Gs, man, 200 gigabits of data. Let's freaking go. That's awesome. But what do you need to know about this? Nvidia owns it. Yeah, Nvidia owns Infiniband. These people are absolutely brilliant. You have to remember that about Nvidia. And look, this stock could crash horribly if they slightly miss. So I'm not here to like put the, knee pads on for Nvidia. I'm just saying, okay, they've got the cabling infrastructure. They have the software moat called CUDA, not Cuba, CUDA. That's their software moat. You want to make a leading edge artificial intelligence platform, you're probably building it out with CUDA software. And they've got both the CPUs and the GPUs now with their Grace Hopper 200. This is a really big deal. The problem is Wall Street's already pricing in hyped up expectations. So yes, you could get screwed on this. Am I going to play these earnings? Absolutely not. Am I long Nvidia? Hell frickin' yeah. Do I think Nvidia and Palantir and Tesla and AMD and Intel are your best AI plays? Hell yeah. Do I think Microsoft probably has good things going for it too? Yes. Like what we talked about though this morning. We touched on this morning in the Market Open live stream, which if you're not familiar yet, totally for free, you could join me in the Market Open live streams. Every single day the market is open. Just type into YouTube, Meet Kevin Live, subscribe to that channel, and then you'll see the live streams. You can join those every day, no cost. Happens right before the course member live stream. And I'm also gonna be live soon for the Meet Kevin Politics channel if you wanna watch that, or the podcast channel. They're all linked down below. But anyway, regarding Microsoft, it's worth noting, I personally think there are some downsides to Microsoft ahead. Don't get me wrong, I absolutely love Microsoft, but here's what I look at when I look at Microsoft. I look at risks of deflation leading to lower rates, leading to a desire for growth at all costs. And as you leave an interest rate sensitive environment, you move away from Microsoft as a safety play, which is a very robust safety play and it's performed very well. And I think your growth is potentially going to be far superior in these plays that I just mentioned. Now, if inflation stays high, you're way better off at Microsoft. Okay, that's just my thesis. Me personally, though, I believe that inflation will plummet, and that's why I like Nvidia, Tesla, Palantir, otherwise. Okay, great. So what else do we need to know about Nvidia? Well, let's keep going here with the Goldman Sachs analysis. So we've got the 610 price target from Goldman Sachs. Forward-looking commentary on infrastructure continues to be supportive of their trajectory. Gaming, you're lapping the bottom. Expecting investors to focus on new color going forward on supply chains. We already know that. Here's their forecast. They think that if you're just bearish and you take out generative AI, Nvidia still does data center revenue of about 10 billion a quarter, which is basically the level where we are now, about 40 billion a year. Personally, my target is actually $100 billion per year, which is roughly 2.5x the current estimate. And it's about, let's see, 100 divided by 65, which is Goldman's bull target. I'm about 50% higher than their bull target. So I guess if you wanted to translate that into a price for my price target, I'm probably sitting at around $900 for Nvidia as a longer term price target. It wouldn't be my 12-month, although stock market euphoria in the short term could price in an Nvidia 900. If it did in the short term, I'd probably sell it because it's definitely a longer price target for me. Getting to $25 billion per quarter at Nvidia, probably gonna be more like a 3 to 4 year play. You've really got to like double and then another half. So I think that's going to take a little bit of time. I would give it about a 30% growth rate. Probably actually a little bit more than that to actually get where I need to get. So if I go 30% growth rate for 3 years, I'm about 22 billion. Yeah, I'm going to have to be about probably 35% to get to my target of 25. Yeah, if you got to grow at about 35% per year to get to my 25 bill, but per quarter, but I think that's realistic. So we'll see. Anyway, that's my belief, and I do think there's a chance the market will price in that euphoria. I still think a lot of bears on Nvidia think that AI is a flash in the pan, which don't get me wrong, like consumer AI to some extent is, but I don't care about consumer AI. I care about enterprise AI because that's where the savings are going to be and that's where the CapEx investments are going to go. So this is my take. I will be live, by the way, tomorrow afternoon 1 p.m., mark your calendar, 1 p.m. November 21st, market live stream. It's gonna be a market closing live stream. Meet Kevin live, okay? That's where it's gonna be for the Nvidia earnings. We'll cover it together. Ready? Buckle up, let's go. And of course, my usual disclaimer. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate an actively managed ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Boom. Well, there you have it, folks. Thank you so much for watching. I'll see you at that live stream. Remember to go to meetkevin.com to check out my Black Friday sales on the amazing programs on building your wealth. Goodbye.